Okay, so let's first of all talk about this past week, and I think I can sum it up in three categories. One, everything was pretty quiet for the week, other than the chaos going on with the Trump going to New York for whatever wildness that's going on there. And then the third thing is every piece of data, just about every piece of data that we got this week, economic data, was negative for the economy. And that's where I want to start this week. Hopefully I'll get through this pretty quickly. So let's take a look at this week. It started, at least from my perspective, with the ISM manufacturing PMI. Now, this thing has been trending down for a while, and anything under 50 is considered to be shrinking as far as manufacturing goes. And that's, we don't have the manufacturing we did after World War II. We had 50% of the world. We made 50% of the world's goods after World War II. We don't have that anymore. Europe's been rebuilt, and other players have come on, obviously China and Asia in general. But this is a weakening sign of the economy. The JOLTS job openings finally came in lower than expected, by 500,000 or so. Jobs in, roughly 600,000 jobs than it was the previous month. So this is on the way down. Mortgage rate, which I just want to make a quick mention of, did go down as I expected it would. And I expect it probably to, at least this next print, will probably be pretty much the same. It started to go down again, the 10-year, until the attitude of, well, they have to wait for the print of the CPI and the PCE before they're, make a decision. But there seems to be a little bit more of an attitude that the Fed will increase another quarter of a point. I don't think that'll happen, but things can change. Obviously, the PCE, excuse me, and the CPI reports next week. And then the ISM non-manufacturing PMI also came in really significantly less than what the consensus was of 54.5, and almost 4 points lower than the 55.1 that was printed last month. So this is significant that we're seeing this drop off. And then Thursday, jobless claims actually exceeded the consensus. Was there'd be 200,000. We were at 228, and we were previously at 246. So it did come down a little bit from there, but the consensus was 200,000, especially as we started to kind of get into the construction season. And then Friday, the unemployment rate today, non-farm payrolls, this ticked down, which may be a negative, but the expected, the consensus of the non-farm payrolls was 239. We came under that number, which we haven't done very much. And you can see here at 236,000 that that's the lowest we've had in 12 months. And if we go back further, now this is one thing that drives me crazy about some of these charts. This is what happened in 2020 is called a special cause. All right. So this number shouldn't even be included. And what it does is it screws up the graph because we have to include this number in there. And so all these things that you really want to see, you can't see because you've got this big point and this big point. And, from COVID. So all these things, I can't tell the difference between that and that. I tried different charts that are out there, but until you get the special cause out of there, it's hard to make comparisons. So maybe getting the raw data associated with it. But a special cause is one you wouldn't put into calculation because you know what happened was COVID, right? let's take a look at next week, because next week's completely different as far as the reporting that's going to happen. Yeah, all the Fed member speeches. Yeah, here we go. And the MBA 30-year mortgage rate, it's going to be a little up, a little down, but I'm not expecting too much of a move at that hour at 7 a.m. because right after that, at 8:30 is the inflation. These are Eastern times, by the way. Inflation rate, we'll see what happens with these. These are market movers, obviously. As far as what the core inflation is going to be, if this ticks down, then you're going to see, I think, the markets explode out of the gates, at least until the FOMC minutes, 5.5 hours later. And then Thursday, we start getting some of the PPI, core PPI type of data. That will have an influence on the market. So it could be a kind of a wild week next week. There's significant economic data being reported. And then Friday, retail sales, was down last month. And, they're looking at it being down 0.4% again. If this continues to weaken, then again, these will play into the hands of what the Fed will do in the next meeting. Again, my expectation is they'll they'll pause, and then there is some expectation. Actually, more people than me, and probably the people that matter more than me, expect a quarter of a point by a small margin. I think it's like 55 to 45% is the feeling at this point. And then you have the Michigan consumer sentiment. Now, again, I'm tracking this because this plays into this deflation piece. We, it's slowly going down for the most part, but, it needs to go down quite a bit. Let's just kind of look at history here. It's pretty low comparably. We see this kind of downtrend here, but, we start getting down into this territory here on sentiment, then that is significant. And with raising rates, it's a recipe for disaster. Anyway, okay, that is the look at the economic data. Like I said, this week was a nothing burger. Next week, I think, will be pretty exciting. I think the first part of the week right now, as it stands, we'll probably get a mild increase in all the markets over Monday and Tuesday until Wednesday morning when this gets reported at 8:30, and that's going to kind of kick off the fireworks, the minutes, the PPI. Those are the primary things to look for, because the producer price index, kind of what goes into the products that you buy. So if that continues going down, then it's going to question why would the Fed raise rates, the federal funds rate. All right, let's take a look at sentiment. The sentiment dropped significantly from last week, down to 35%. And so I think we're in this kind of transitional area where people were very bearish. We're a little bit closer to the historical averages, but not quite there, still a little under it. And I expect this number to continue to go down, for a while, and we'll see how that plays as people get bold in accordance with what happens with CPI and the PPI and some of the other alphabet soup that we have going. Fear and greed index has changed dramatically over the last 2 weeks. Now, it was just 2 weeks ago we were in extreme fear, and now we're in greed. This thing gets some momentum going this way. I am expecting that we're going to hit extreme greed here in the next week or two. And then, we'll have some type of pullback, which will pull the fear greed index back, probably maybe even to the fear, depending on how far the drop is. But nothing Nothing is linear. All the data I've ever looked at in my life has told me that from looking at corporations. Let's look at the Dow Jones Industrial Average. So a look at the markets. You can see this is a daily chart. Kind of picked up from there. It wound up the week up 200 points. As long as we stay above this line, maybe if we go ahead and print something above here, I think we're off to the races somewhere around, what is that, 34, up in this range, 34.5, up in that area. Then we start to get higher highs here. We've already kind of broken that from this downtrend here. And then we look at SPY, and when I typically watch, the banks have been affecting this since they're represented pretty well on SPY, but it moved, I think, 20 cents or 30 cents, something like that this week, with all the ups and downs in accordance with the way the market moves, but it wound up moving like nothing. Taking a look at the US 10-year, we have it finally breaking this barrier here. I've been looking at 3.4 and staying down. Let's look at the weekly on this. It closed below it now for the second time, and that's usually an indication that this thing should start to fall. But that doesn't work 100% of the time. I'm just going with what the probabilities are. These aren't guaranteed. And then the DXY, we're kind of in this downtrend from here. I thought we might do something. If we break this 101, roughly the 101.57 area, I think you're going to see the dollar start to make its way, towards first of 100, under 100, and then under 90 ultimately. Crude oil for the week. These are again weekly data. We had a little pop up here. Expectation is that this won't last with the weakening economy. The VIX, which is another indicator that conditions are good for the market to run up. And so that's kind of the markets real quickly. What I wanted to end with is I want to take a look at these cup and handles. It's a, anybody doing technical analysis will tell you about the cup and handles. The statistics, I like technical analysis. I like data. I think you have to couple that with fundamental analysis too. But there are some things that are going on, obviously, in the economy and with the markets that I think people should educate themselves on. And one of them is this cup and handle pattern. Now, we've had this with the, excuse me, we've had this. I'm going to give you three here. The GDX has kind of begun its breakout, and you can, whether you look at this weekly, which this is, or daily, you can still see this cup and handle, and that we're now starting this trend. Now, typically they'll tell you there's two places that you would buy into this cup and handle pattern. We did also have a double bottom, which typically, I think that the rates that I read were like 80%. That it goes up off of a double bottom, but we're in this kind of channel here coming off of that in the handle, broke it, and so I think this thing is going to run up. And this is not a trading call. This is just education. Things, even if something's 80%, means 20% of the time it's going to go the other way. And no matter what, if you learn how to trade, that you need to learn how to put stops in, behind it, so that you don't get killed if it ends up going all the way down, let's say 26 or 20 or whatever. So I'm not recommending these. I'm just letting you know that these are cup and handle patterns that I've seen. And then silver is another one. Now, it hasn't quite broken out like GDX. GDX has kind of had that. Let's go back there for a second. You see this bar here, this candlestick was a pretty aggressive breakout of there. I'm anticipating the same thing here to happen with silver, that we'll see some type of breakout associated with it. And then, what makes these things up? These are ETFs, made up of a basket of underlyings, and the silver metal market, or Silver Corp Metal Corporation has made a break. See this rather large candlestick here, and made its break up out of this cup and handle again type of pattern. And so these are some things to look for. They don't guarantee, again. They typically they put the odds in your favor that's going here. And kind of the two places that, if you read about cup and handle patterns are, the bottoms of here, which sometimes you don't know where the exact bottom is, but, this was a bottom, and then, it started to make its way back up, and then it came back down. But ultimately has been in this uptrend ever since. But there are a number of metals right now that have this cup and handle pattern. Some I bought into a long time ago, but I wanted to help people along in their education that this is something to look for. And right now I'm seeing it a lot in the metals markets, whether it's gold or silver, precious metals. So that's really what I wanted to cover this week. And remember, there is always a better way.